Okay, so today our discussion is more on income tax for corporation or a corporate income tax. But before that, let us first summary what happened if you're an employee, if your business is a sole proprietor, if it is a partnership, and if you are a professional. So, regarding with if you are an employee, there is a certain withholding tax table given by the train law, wherein if you are earning not more than 250,000, then there's no need to compute your tax. Okay? So you have a 0% percentage of tax. If you are a sole proprietor and if it is a partnership, then what you need to do is to first compute your net income. So this supposed to be net income will be your gross compensation income on the computation of your individual tax. Okay? And you need to deduct the SSS, PhilHealth, Pag-ibig, which is your government contribution, and your certain allowances given by the Bureau of Internal Revenue, which is 90,000. Maximum 90,000 allowances. So with these three, it is what we call as the individual tax. Okay? Or the withholding tax itself. So this one, employees, sole proprietorship, and partnership would have the same computation. Okay. So, if you are a professional, what you need to do is to compute at least 8% from your net income. So, for example, you earn 800,000 for annually. So, what you need to do is to compute the 800,000 multiplied by 8%. Okay. But, if you are earning more than 3 million, then the percentage will be based on the withholding tax table given by the train law. Okay, the new withholding tax table given by the train law under Bureau of Internal Revenue. Okay, so you understand now. So today, we are discussing now the corporate income tax. Today, our discussion is more on the corporate income tax. So, whatever business it is, we call it as our revenue. So, here, we're going to fill up your income statement regarding with what business it is. So, let's start with the service business. What if our business is a service business? So, we start with the service income as part of our revenue. Then, we need to deduct the operating expense. So, from the service income itself minus the operating expense, we already have our operating income. From this operating income, we can now compute your 30% income tax. So, operating income minus the 30% income tax, then we will have our net income. Okay? So, whatever it is, for example, you already have an operating income worth 30,000, then you need to compute a certain 30% from it. But if just in case it will become a net loss, then what you need to do is to compute the 2% of your service income, which will be your minimum corporate income tax. So, I will give you an example. So, for example, you earn, from the 1 year period, you earn 1 million. 1 million. Okay, so we put 1 million here. And you have an operating expense, 50% operating expense. So, 50% of 1 million will be 500,000, right? So, we have here 500,000. So, we deduct the 500,000 from your service income. So, 1 million minus 500,000. So you will have your operating income of 500,000. So, because we already have our 500,000 operating income, what we need to do is to compute the 30% of it. So, 500,000 times 30%, so we have how much? So, we have 150,000. So, this one is 150,000. So, 500,000 minus 150,000, then your net income will be 350,000. Okay. So, from this income statement, your 150,000 will go to the BIR. Okay, so our next discussion is if your business is a merchandising business. This is where you buy and sell your product. For example, you have a t-shirt business, and this is what we call merchandising. Or you have an online business. So, for example, you have a business, you have a food cart business, then it is also called as merchandising business. So, what you see on the income statement is if your business is a merchandising, you start with the word revenue or sales. So this one is a corporation business. So you have a sales or revenue worth something, and then you need to deduct the cost of sale. So what is the difference between the cost of sale and the expenses? Okay, because your business is a merchandising, you need to first compute what will be your cost, what will be the cost of your product. So this is what we call as the cost of sale. So you have less sales minus the cost of sales. So you will have your gross profit. So this is called as gross profit because we also need to deduct again the operating expenses that you have. So this is the two expenses that you have, the cost and the operating expenses. So sales minus cost of sales, we have the gross profit. And then, from the gross profit, we need to deduct the operating expense. So, operating expense, also known as the selling and administrative expense. So, out of it, we will have your operating income. So, from your operating income, we can now compute the 30% corporate income tax. So, here, we need to compute the corporate income tax, which is 30%. And after deducting the operating income minus the income tax, you will have your net income. Okay, let's start. Supposedly that your business is having a sales worth 3 million. So, again, so we have a 3 million sales. So, this one is only an example. And you have a cost of sales worth, for example, 1 million. So, we need to deduct the 1 million here. So, out of 1 million, 3 million sales minus the cost of sales worth 1 million, you will have now the gross profit worth 2 million pesos. So, as for example, you have your selling and administrative expense worth 7,000. So, this one should can also be deducted here. So, 2 million minus operating expense worth 700,000. So, the remaining operating income will be 1,300,000. Okay, so this 1,300,000 will now be part of your 30% income tax. So, 1,300,000 multiplied by the 30% of it. So, how much? So, we have 390,000, right? So, 390,000. 1,300,000 minus 390,000. So, we have how much? So, we have 910,000 net income. Again, what you have from your tax will be part of the Bureau of Internal Revenue tax. So, you will pay it to the RDO of the BIR from where you are having your business. Okay, to summary our discussion on corporate income tax, 30% income tax will be from your operating income. And if just in case there is a net loss, then you need to pay a 2% MCIT or minimum corporate income tax from your sales. So, this income will be computed and will be paid to the Revenue District Office of your place of business. So, Revenue District Office, for example, here in Cavite, you have RDO 54 located in 13 Martires, Cavite.